Imagine your country as a startup CEO on steroids, issuing bonds like a company raises venture rounds, borrowing and investing in massive infrastructure. Now picture that power shaping the world. That's how governments, especially the US, truly operate. And if businesses work, governments are wielding nukes. Let's reveal how those moves build and break countries. What if your company had a constant revenue stream called taxes, or borrowed billions through something like bonds? That's exactly how nations run. In 2024, the US Treasury sold over $6 trillion in bonds. Essentially, government IOUs that fund everything from roads to research, but when done wrong, it becomes a bailout scenario. When a government echoes a venture capital firm forced to inject capital into a failing asset, today we're unpacking how governments raise, invest, and return value, lessons every founder can borrow from national scale strategy. Governments issue bonds like you might issue a business loan. You lend money, they pay it back with interest over time. These are long-term promises, much like a 5-year or a 10-year note your business might offer to investors. In 2024, the US raised a staggering $6 trillion in through bonds, funding key projects like semiconductor, manufacturing, and clean energy infrastructure. Another example, in 2021, the Export-Import Bank of the United States guaranteed loans totaling to $4 billion to support the US-built aircraft in Indonesia. Today, Boeing collects from those loans, and American workers get payroll. That's the government working like capital allocation on a massive scale. If this sounds like your cup of tea, subscribing is the easiest way to catch the next one. Taxes often feel like a drag, but imagine trying to run your business without power for a week. That's what an economy without taxes looks like. The US collected $4.8 trillion in federal tax revenue in 2023. That's about 18% of the GDP, fueling everything from infrastructure and defense to biotech grants and climate initiatives. Those dollars are catalysts. Tax credits help launch Tesla's gigafactories and subsidized solar farms. Every business should ask, what revenue model fuels my growth? And is it reliable enough to match those tax level stakes? In 2012, the US and Japanese firms jointly invested $3 billion in a microfinance program across Southeast Asia. By 2020, small businesses in Vietnam and the Philippines had repaid those loans, boosted exports of American tech products, and created tens of thousands of new jobs, earning back capital plus interest and opening new markets for US growth. Similarly, after the 2008 financial crisis, the US invested $20 billion into solar and wind projects in developing countries via the Power Africa initiative. Today, those countries not only repay their debts, but have become a reliable customer for US energy tech companies, turning foreign aid into business opportunity. Those moves are geopolitical power plays with ROI. Just like a venture capitalist stepping in when a portfolio company is struggling, governments sometimes bail out sectors to protect national stability. During COVID-19, the US injected $5 trillion in stimulus funding, an emergency loan program for millions of Americans and businesses. That bailout resembled a forced investment when too many capital lines were at risk of collapsing. It bought time, and in many cases, those businesses returned to profitability, repaid loans, and started hiring again. But like any investor, the government expects those dollars to buy resilience and renewal, not indefinite support. When governments invest in infrastructure, they don't spend, they strategize. The 2021 bipartisan infrastructure bill earmarked $1.2 trillion to repair roads, expand broadband, and modernize transit systems. That's the equivalent of growth stage startup reinvesting capital into its production backbone. Roads become factories, broadband becomes bandwidth for innovation, tax credits for electrical vehicles didn't just reward buyers. They triggered the creation of the entire industries. The lessons build infrastructures first, and the returns, both economic and societal, follow. Think like a country. Raise capital intentionally with clear payback like bonds. Not wishful thinking. Establish predictable revenue channels like taxes, subscriptions, or reoccurring models. If you bail out struggling teams, set strict ROI targets. Invest infrastructure level capital, product architecture developer tools, market access, and build with long horizons. Real progress happens on 5 to 10 year timelines. That's how national economies grow and how startups scale from a niche to global. Governments don't just tax and spend. They raise capital, allocate resources, and earn returns. If you're running a company, take a page from that playbook. Fund smart, treat revenue as a fuel, invest for real ROI, and plan for the long term. Follow me for more lessons drawn from the systems bigger than a startup, because the smartest builder thinks country-sized.